okay, people have values of homes outside of our area that are so significantly high and have so much equity in it to where when they come here, they're like, oh, 800 grand for that? Sweet, I'll pick it up.
Yeah, I'm going to pay cash for it and have
cash,
500 grand left over from the sale of my house.
From the Blueform Media Studios, this is the 435 Podcast, the pulse of Southern Utah.
If you're looking for a nice cup of coffee and you're in downtown St. George, FS Coffee Co., that's where you're going to want to stop. It's right there on the corner of Tabernacle and Main Street in downtown St. George. So if you got a bicycle, ride it on down there and grab a drip coffee and tell them the 435 guys sent you. Welcome to the podcast, everybody. Today, we are going over real estate statistics over Q1 for Washington County. We're going to hit you, before I let Brandon and Jeff jump in and comment on it, I'm going to give you a really brief outline of just where we're, how we fared, where we're doing, a brief description of how we're doing in the market right now. We're going to update these guys. They already know, but to update you, and then we're going to dive deeper into it. So for the first 10 minutes, we're going to give you just the fast facts, the details of the real estate market. And if you want to hear more, we're going to keep into the conversation. We're going to talk about migration data. We're going to talk about labor data. We're going to talk a little bit about markets. Today is Wednesday, April 3rd. Liberation Day was yesterday. We got a grief about our tariff conversation last time, just 3 short months ago. But everybody's getting educated on tariffs. But so to rattle it off quickly, hopefully you guys can see my screen. Mally, they can see my screen, right? All right, absorption rate for the month of March was 5 months of inventory. We continue to climb in inventory, but year to date, we're at 4.82 months of inventory. So that's saying if no homes hit the market, it would take roughly 4.82 months to sell out everything that's on the market. That's a pretty close to a balanced market. It's still slightly seller's market depending on the price point, but overall, we're in a balanced market. That's a 22% change from year to date, just a year ago, where our absorption rate was just under 4 months of inventory. Average list price, something we're going to dive in a little bit deeper. Year to date, I'm going to stick with year to date. We're going to go over the last 3 months, but $829,000 was the average list, where the average sold was $634,000. So year over year from last year, 2024 to 2025, we had a 2% change downward pressure on pricing because of the increased inventory. We're at $634,000 as the average sold price. People are trying to sell for way more than what the market's really willing to bear. A more accurate number, I like to see the median sold. So this is the middle number. What's the middle house out of everybody who's buying a house? What's that middle number out of total sales? 520,000, which is basically no change, just about 1.7% higher than last year. About $10,000 more. You're going to pay 10 grand more for a house on the sticker price today than you did last year at the same time. Average days on market, we dropped 1 day from a year ago, so 78 days on market. In March, we had 76 days on market, which is a 10% change from March of 24. But if you look at in the rolling 12 months, and I'm going to break down days on market per price point, which will kind of be an interesting number to see. But we're seeing a steady climb. If you look at 12 months rolling in the average days on market, it's just taking longer for people to make a decision. Median days on market's 46 days, a little bit bigger, a little bit longer than the 44 days back in 2024. 30-year fixed mortgage rate today, which it changes on a day-to-day basis and a week-to-week basis, and month-to-month basis. And this is an aggregate, several different surveys. This is Mortgage News Daily Index. It's Freddie Mac. Mortgage Bankers Association, FHA, monthly survey. This is an index of all of those. 6.75% in January of 2025. So just 3 months ago, we were at 7.26. So we're about a half point difference in change from January to today. So if you're a buyer, you're going to get a better rate today than you did at the beginning of the year. With more inventory, lower rate, it's a great time to buy depending on your situation. 78 days on the market. I said 76. 78 days is year to date. Balanced market, I covered that. What sellers want versus what they get. The original list price to the sold price. So the sticker price that they put on the market for the very first day of the sale, they're getting 95.9% of that asking price.
Like overall?
Overall.
So not breaking that down per price point, just...
Not, yeah, this is just overall, and this is a 3-month average. So I took the last 3 months of what that original list price ratio was. 95%. So,
or in other words, if you list a house for $500,000, you can reasonably expect an offer of $485,000 or to sell it for $485,000.
Well, I guess it just depends. What I'm saying is, if you list a house for $500,000, but it's not worth $500,000, you're not going to get that price, and you're going to sit on the market.
Pay for it.
Yeah, exactly. What's the value of a house is what a buyer's willing to pay and a seller's willing to sell it for, right? Sellers are asking more for their house, and buyers are staying pretty steadfast and saying, we're not going to buy that house. We're going to let it sit on the market. And as inventory climbs and days on market climb, they get less interested in paying the sticker price. So
I said $485,000. I meant $475,000.
What?
My math.
Yeah, 5%.
Math is hard.
Math's hard. I like to look at this data. This is entertainment purposes because I get this question all of the time. Well, I was looking on Zillow, and the average price per square foot for this type of home is this dollar. Well, a single level price per square foot, this is just of the last 90 days, was $299 a square foot, which is actually a lot bigger than it was just 3 months ago. The 2-story price per square foot is $261. So there's a big difference. I eliminate basements. We don't have a ton of basements. Walkout basement properties, or daylight basements is what some people call them. I leave that data out because there's not a ton of those. But there's a big jump in what the appraised value is between a single level living space and a 2-story. This has to do with our demographic of who buys homes here.
Yeah.
But there's a big jump. So really, when you're looking at price per square foot, you got to make sure you're looking at homes that are similar to yours. You can't just say, well, my neighbor down the street sold for $320 a square foot, but you got a 2-story with a 2-car garage. It's not going to, it's in no way comparable. So
there's also a lot of appendages that go into price that don't reflect on price per square foot.
Right.
Like,
exactly.
a great view.
Yeah.
That's not going to,
and then it's also, that's subjective too, right?
Correct.
Somebody's view of a golf course is different from a mountain, it's different from a valley, all those things. So that's the quick and dirty of it. What are your thoughts? What are your immediate thoughts on where we're at with the market?
I mean, a lot of what you hear in the news doesn't necessarily reflect on what's actually happening or what's happened in the last few months. Yeah. Or like, you always hear
like what?
Maybe not anything specific in the news, but just like, mainstream media seems to be pretty negative about the economy, or someone, I was just talking with my neighbor and it was like, he was like, well, the economy's not doing well. And I'm like, it's a bit of a generalization, but
what's interesting is the economy's been doing really quite well.
Right.
But people's expectation of it not going well in the future translates to it's not going well in the present.
Mm-hmm. Mm-hmm.
It's an interesting phenomenon.
Mm-hmm. So I guess my point is people are still buying and selling homes, and we haven't seen, any sort of a quote unquote crash, right? People are still buying and selling homes, and it's unaffordable for a lot of people, but it's also, there's also a lot of people out there with a lot of money or a lot of equity that are moving here.
What do you think, Brandon? Just when you heard those stats, anything jump out to you?
No, I think like the price per square foot seems a little bit rich, but I think the biggest thing to consider is like, it's the real estate statistics. It's so hard to run a quantitative analysis on this because those intangibles and every property is different, right? Mm-hmm. And every market's different. And in particular, like, Washington County is a decent sized county, but it's not, we don't have, 10,000 transactions going through the system every single month to have like this, like, really
year to date in the last
data.
90 days, we've only had 900 homes sell.
Yeah. So like,
907.
so going off, last 90 days, there's just, and then that's across a whole spectrum of single family. There is walkout basements. There are 2-story properties. There are properties that are on bigger lots and smaller lots and attached townhomes and, or attached townhomes and huge parade of homes type homes, right? Like there's it's not 900, super similar properties, right?
Yeah.
And so trying to run the quant analysis is tough. We do it because we try to we try to learn from it and try to put some context to it, the price per square foot seems a little bit rich, right?
It was $299, right?
$299 for single family, single level.
Yeah. But, like how fat are the tails, right? So is there something that we could scrub out of that as an outlier and it changes the numbers? My guess is probably. And so is the price per square foot really that rich? Or if you get something at $260 a square foot, are you getting a screaming deal? I don't know. I think, it's a, what's the word I'm looking for? Real estate's an inefficient enough market, right? I mean, and that's what makes real estate, the investment opportunities, really appealing and attractive in real estate. A lot of times it's because of the inefficiency and trying to take advantage of those inefficiencies. But the data is not perfect. So it comes back to like, who are the people that are buying and selling right now that I've kind of seen? It's the people that need a home, right? It's the people that had a home somewhere else. They need a new home. They moved here for whatever reason. It's not the like, we just think we would like to upgrade and have the, newer home with bigger house with the pool, right? Like doing the upgrade thing. I think it's the people that just like, yeah, I'm ready to, we are ready, willing, financially stable, feel good to buy our first home, or, we're moving to the area, we're selling a home somewhere else. We want to just buy another home and kind of stay in the real estate market that way and own what we live in. And it's more of those transactions. But that leads to a lower transaction count that then leads to the data being a little like, less predictable.
Yeah.
In the metrics.
It goes into like the individual, you talk about the economy isn't doing well. Well, it's what is the personal economy of the person that's buying a house in Southern Utah, right? And something we're going to talk about a little bit later on is migration. What are the values of homes from the areas where people are moving here from? Because if you're a local, you get myopic in saying, I can't believe home values are $200, $299 a square foot. And we were just talking to a guy, and he was $1,300 a square foot in Orange County, right? That's such a huge otherworldly perspective, is that we tend to not remember that, okay, people have values of homes outside of our area that are so significantly high and have so much equity in it to where when they come here, they're like, oh, $800,000 for that? Sweet. I'll pick it up.
Yeah, I'm going to pay cash for it and have $500,000 left over from the sale of my house.
But you know what happens though is those markets don't digress back the same way. Like the convexity is different. Like Orange County is never going back to $300 a square foot.
Impossible.
It is just not. If that happens, pandemonium, chaos, utter catastrophe, right? I mean, the economic driver of that is going to be so like, man, none of it probably matters.
Yeah.
You know what I mean? It's like at that point.
It's kind of like you get lost in the weeds, but let me finish my point though here with that individual economy. So something that I thought was really interesting is that interest rates are 0.25%, so 20 basis points lower. I put 0.25%, which isn't correct, but it's 0.25%, meaning it was 707 in 2024 at the same time. April of 2024, it was 707. Today, it's 6.75. So you have a lower interest rate, yet last year we were selling homes for more. So interest rates have come down. Inventory's slightly gone up, just slightly, not a ton. Inventory's slightly gone up, but prices have come down. So it's interesting to see that the individual economies were getting lower prices of the homes over just this last first quarter than we did in first quarter last year with lower interest rates.
Yeah.
Which is telling me, there's something going on. We're frozen in this weird way because we go up in price and then we come down in price, and then we go up in price and come down in price.
Since 2022, the bond market has been telling us since 2022 that the correlations between equity prices and bond or interest rates is broken. It's not the same analysis as it was in the past. The last, since the GFC, which is interest rates down, home prices up, right? Home prices go up, they go up. And if interest rates come down, they go up even faster and harder.
But that's not necessally true anymore.
It's not necessarily true anymore. And people call me crazy.
You're going to have a lot of lenders in the comments.
They already all hate me. So not all of them, but a lot of lenders don't love what I have to say. But it's true though. And you're saying it exactly right. Like, hey, interest rates have come down a little bit and everyone said prices would go up and there'd be a bidding war, but the prices have mildly receded with the interest rates, right?
So in a real world scenario, if you were a buyer last April 3rd of 2024, and you're like, well, I'm gonna wait until next year. Are you in a better spot today than you were in April 2024 as far as like?
I think you're in a better spot.
If nothing else has changed in your life, right? If you haven't lost your job or something like that, yeah, you're probably in a better spot.
Yeah, because you have more houses to choose from, and you're gonna pay a little bit less,
which tends to be the opposite of what like most lenders and real estate agents tell people, right? So
because
that's not necessarily my main point.
Their whole focus is I want to market to get people to reach out to me. It's like fire them up, fire up the demand, or fire up a seller to make them want to get off the fence, right? Mm-hmm. And I think it's inappropriate, truthfully, of the person benefiting from them getting off the fence. I'm not quite sure if that there's a moral line here it's touchy to draw on, but it's sales. So like at the end of the day, you're not going to ever stop it. Right. So that's why, and this is why I think, the Realtors Hate Me Instagram page, it's a function where he's missing the fact is that if you go to this like low value, real estate agent and, give this perception of optionality to a seller or a buyer, and you go to this fully automated real estate agent model, it's going to go to where what's the incentive? The incentive is to do more transactions. For that business to exist, they have to do more transactions for them to make enough money, which means they're going to give less honest opinion in building trust with that clientele and push for the sale. Because the incentive is only they have to sell more properties for that business to continue keep going. Where a real estate agent, right, where we could go sell 100 homes in a year, right? But the incentive for us to sell 100 homes means less quality service to our clients, less repeat referral clients, working with people that know, like, and trust us. I would rather do significantly less sales, continue my lifestyle the way that it is, and make sure that I'm building trust with my clientele. And agents that are just trying to sell more and more and more homes, which is the culture of real estate agents, they just want to get people off the fence so that they can sell more real estate. And that to me just,
which is ironic on that Realtors Hate Me Instagram dude. I think he posted what his real name is that he was lying about it the whole time.
I don't know if he said he was lying about it, but it definitely feels like he was just making that whole thing up the whole time.
For sure feels like it.
Anyway, we won't talk more about that guy. So I thought that was interesting. Inventory's at a 2-year high. Back to 2022, 2-year high of inventory. I thought that was interesting where that supply is still up. And then the original sales to list ratio being 95%. I thought that was really interesting too. Go ahead.
If I can I want to interject just something really quick. If there is people that are thinking about buying though, like here's the struggle that people buy when we talk about like, are you in a better spot this year than you were last April, right? It's easy to say, I'm going to wait till next April. Like I'm going to wait a year and see where things are at because, I think this is going to go down or whatever, right? I think rates are coming down. I think prices are going to come down. You got both. Okay. But now you're in the spot where it did improve for you and you have to reevaluate and say, okay, so now am I going to buy? And most people, what they fall into the trap of doing behaviorally, and this is just, it's built in all of us, is they say, well, now it's going down. I'm not going to buy right now. It's going down. I'm going to wait another year.
Yeah.
And what you end up doing is like, you can end up missing the opportunity altogether. Right. So if you've made that call and you're like, I'm going to wait, really take it serious and say, hey, okay, let's take a serious look. Do I need a home? Is it really time to buy? Is it going to add stability to my family? Is it going to add those values? And, be careful continuing to try to time it. If your end goal is to own a home the next decade or two in Southern Utah, right? Like you have that stability to do that. Be cautious on trying to do that. I think you're better off looking for saying, okay, the market is generally giving me what I was looking for. Now I'm going to at least tighten it up, be really serious about like, let me find that great deal that's in this market too. Let's look for the right thing still. But be high intent that if we find that, we're going to go ahead and make it happen.
I think you're right onto something is that like if the market's going down, I keep holding out to see if I can time the market, right? There's plenty of investment, gurus out there that are legitimate, right? Tony Robbins being one of the best ones out there to say, you cannot time the market. You can't time the bottom, right? And real estate is not a short-term investment strategy. It's not. If I'm honest, it's cheaper to rent a house right now in Southern Utah than it is to buy a house. Period.
Yes.
Right.
For the most part, yeah.
So if your function is, oh, I'm thinking about buying a house and living here for 2 years and then maybe moving out or moving up or something and doing something different in 2 years, I think that might be a mistake. I think you're making a decision on too short term of a basis, where back in 2019, right, as prices were running up, I think a lot of people were like, you got to get in because it's going to be a while before it comes back down. And if you bought in 19, you're still sitting in a good equity position. But if you waited till 21, you're probably going to get the same exact price for your house today as you did in 21. And oh my gosh, man, I was thinking about all these houses that, they were listed at basically the price that they're listed at today, right? Some of them are negative equity. It's because of all those multiple offers. Like we got in such a fever of paying over asking. Is so many homes bid over what market value was, and now today, 3 years later, 4 years later, that market value is less than what you bought it for, right?
Your interest rate might be low.
Your interest rate might be lower, but the sticker price on the house. And so if you made that decision in the short term and you weren't thinking long term, I'm going to live in this house for a long period of time, it could have been a bad decision. So I think it's a beware situation for investors, speculators. In Southern Utah specifically, I think it's a beware situation because, we're locked and frozen, and anybody who tells you they think it's going up or going down over the next 12 to 18 months, they have no idea what they're talking about. They don't know. It's a 5-year run. I think a minimum 5-year run is what you have to be thinking about when you're buying a house, especially right now. Demand is down 4%, so 4% less homes have sold so far this year, 2025, than they did in 24. It equates to about 40 homes, so it's not huge. Yeah. But supply is up 19%, right? So if we're thinking basic economics, supply and demand, if I'm going to forecast something out, there's going to be continued downward pressure on pricing. Is it significant? No, because we've seen already it's only a 2% drop year over year.
Well, and if what Brandon just said has any semblance of accuracy, supply is up, demand is down, but prices are staying pretty stable. I mean, it would kind of make sense.
Yeah, exactly. You can see here on the screen, Al, if you want, just to see those price trends. This is average sold sale, median sold sale over the last since 2020. So this is, right at COVID all the way up till today. You can see a big spike, and then we basically flatlined really since 23. We flatlined, and we haven't seen a ton of movement in the median sale price over time. And for all intents and purposes, I don't think we're going to get unlocked out of this anytime soon, mainly because it's an affordability issue. Another price trend, this is actually the active average list price. So the compared to what sold, the average sold list price is. I'll show the guys as I knock over stuff.
Sorry, FS Coffee.
I'll show the guys this. Look at the 2020 numbers, or 2022. Look at the active average list price and how fast it came down. So the sellers typically shift.
Off a cliff.
It falls off a cliff. The sellers kind of shift when the market is shifting, but we've basically hovered around that 95 to 96% price ratio since 2022 over the last 3 years, which is kind of interesting. So it's not too much different than what we've seen in the past. But this is the advice to the sellers. Advice to sellers is, if you need price A, that's one thing. List a house, see if you can get that. But if you go to a real estate agent and you look at the data and you do a proper comparable market analysis and say, yeah, but my house has new garage flooring, right? Or I painted the shed, that's probably not going to get you any more value otherwise based off the comparable data. And so we still have to price our house competitively in the market, right? Every market is within a 6-month window, right? If it takes 70 days to sell, you got basically 90 days to really test out the market and find out what's going on in that market. If you price it too high, you're going to just sit on the market and you're going to inevitably get less because buyers know they're motivated. There's some kind of motivation to sell. Mm-hmm. So make sure you're pricing the house accurately into the market, because there's clear data to show for 99% of the homes out there, there's clear data to show this is what the value of the house is. So make sure you do an accurate evaluation. The Zestimate does not count. It does not count. Sometimes
think-
it's close. Sometimes it's accurate.
I think sometimes if somebody a seller thinks buyers are dumb, or in other words, a seller doesn't understand that people that are in the market for homes in their price point, location, whatever it might be, buyers know exactly what's going on in the market.
Mm-hmm.
They're looking at homes every day, and they know they're not dumb.
And if you overlist a house, you're actually helping those other houses that are overlisted, helping
Right.
them sell,
Mm-hmm.
right?
Yeah.
It's not. That's a behavioral bias. It's not exclusive to people selling homes.
What's a behavioral bias?
What I have is the best thing ever, and it's worth more than everything else compared to it. Than
Yeah.
whatever anyone else
Yeah,
has,
like
because this is my house.
Right.
This is
super cool. It's
we have
awesome.
great memories here. We've loved it
Yeah,
here. Someone
that's what I
else
was
is going
gonna
to
say.
love it more than any other house. And
We
they're gonna
raised
pay
5
more.
kids here,
Yeah.
so yeah,
Look,
and that's fine.
and
That's
you
great.
you want to know what? Buyers have the exact same bias on the opposite end of the spectrum when they're going to look, which is everyone's house is crap and I should get a great deal. I'll lowball everyone. You know what I mean? Like everyone wants me to buy their house. I have money I can buy. Everyone wants to sell me their house right now. Like that's why they're trying to get rid of it. Why are they trying to get rid of it if it's so great? And truthfully, that's why people use agents that talk some sense into them and help a buyer and a seller come to the table and make a great, an agreement where everyone feels like they win.
Yeah.
Yeah. So what that kind of brings up this thought that I had of what you mentioned earlier, Rob, was, this is a sales industry, and I think maybe it should be more of a consultation industry. You know what I mean?
Yeah.
Like instead of
consultant.
a consultant, right? A real estate agent isn't, or maybe shouldn't be a sales guy or gal. They should be consultants. Like I'm here to present you data and make informed decisions based
Which
on
I think
data.
that's why there's a strong argument to where agents don't get paid off a percentage of the house, but getting some kind of rate, right? Just like an attorney or an accountant does, right? It's getting paid off the percentage of the house. I can see that argument is because to be able to shift from a salesperson where they're getting paid off what the sticker price is on the house versus they get some kind of rate over time. It's just the industry as a whole has to shift that way. It's not. It's really tough to make a hard cut. But I think it's coming.
The industry lowered the irony of it is that the industry lowered the standards and the barrier to entry low enough that it became a sales industry because
The NAR did. It's
and state
the organization.
Come on, NAR and the state. Be honest, like it's not. It
They're
is
just a function of the NAR.
It's yeah, that's true from a lobby standpoint. Yeah.
Well, I mean, you can't be a division of real estate unless you're a part of the NAR. And so, like the Utah Division of Real Estate
Seems like a racket.
To be a part of the UAR, you have to be a part of the NAR. You don't get a choice. So it's just like a
but the state could regulate the standards differently.
They could.
They won't because of lobbying, but they should.
Yeah.
And my point being is like no one says like, oh, that's a real estate sales office. Like it's a real estate brokerage.
Mm-hmm.
Okay. And the difference between like somebody that brokers deals and a salesperson is if I want a salesperson, I go down to the car dealership. They've never said that's a car broker.
Right.
And if I want a cell phone, I go down and talk to the guy at the cell phone store and buy a cell phone. The salesman at the cell phone store sells me a cell phone. They've never said that's a cell phone broker, right? He's matching the hard to find buyers to Apple to sell their iPhones.
Fiduciary is the main difference.
It's like, well, I don't even think it's that. It's that a broker is when there is a illiquid market that you have to find
Yachts.
There's complexity to
There's
a
no
deal.
yacht salesmen. There's yacht brokers.
Yeah.
They find deals and put them together.
They find deals, they put them together, they match a ready, willing, and able buyer with a ready, willing, and able seller, and they help those people come together to create a positive outcome, right? And that's what a broker really should do, and that's what real estate agents should be focused on doing. Like real estate isn't sales; it's brokering good deals, and you make your living brokering good deals.
Yeah, it's almost like a title because if you look at the broker of a brokerage, they're almost like a manager. They're not involved in any of the deals.
Yeah.
Or very little of them unless there's issues. So it's almost like a title.
But that's because like from a technicality standpoint, agents, right, are just representatives of the broker. So technically the broker, that's the manager at the brokerage office is the one that's really technically the one doing everything. But like my point being is there is a shift there where like real estate shouldn't be sales. But
I think
but they've watered it down so far.
My going back to a fiduciary is that a car salesman doesn't have fiduciary duty, right? Which is what the industry's leaned on for so long. The industry as a whole said, but we're a fiduciary, and so we are more of a consultant.
But only because they're representing a designated party. Like that's not even specific to all brokers, right? If you're a yacht broker, you're typically like, I've got people looking and I got people selling, and I'm going to match it up. There's not going to be there's not going to be the same like fiduciary obligations the way that real estate agents toss that around. And I've never felt good about agents tossing that around because of the nature of the way that agents are compensated, right? Like, hey, I'm a fiduciary to my buyers here, but my compensation is based upon how much I get them to pay for the home. And by the way, it's the person across the table that's paying me.
Yeah.
Right. That has never,
it doesn't make any sense. Like when
there's no other industry.
When you map it out, it doesn't make sense.
Well, and and
real
there's a
estate
difference
agents
between being a
are gonna hate us
fiduciary.
too.
There's a difference between being a fiduciary when you're giving somebody advice, right, and when you're representing them. And the difference is in real estate, you only have a fiduciary obligation to the client when you're representing them to another party. You don't have a fiduciary obligation to the client the same way. If they say, hey, should I pay $380 or $390 for this house? You don't have an obligation to say, well, I think I can negotiate this down. We should get it for $380. If it's more than $380, we shouldn't buy it. If they're willing to pay $390, you can say, yeah, pay $390 for it. That's not a violation of your fiduciary obligations as a real estate agent, right? Mm-hmm. Okay, because you don't have a fiduciary obligation like when you're talking to them. You have a fiduciary obligation when you're discussing them to other people.
I think a court would argue differently, though. I think a court would say when you knowingly have the data at your fingertips to say that this house down the street, I think it does, because when you sign off, when you have a buyer broker agency agreement, you're stating that you're giving them real estate advice based on your knowledge of the market. And if now proving that is a completely different story, but it's the fiduciary part is an accountability piece to it, which agents across the board have been in violation of and found guilty of violating that fiduciary duty.
I have an example.
There's damages.
How about in 2021 when I would talk to people and they'd be like, "Oh, we finally got a house," and I'd be like, "Yeah." They're like, "We had $40,000, to buy a house, and we finally got one." I'd like, "Oh, what'd you, how much over did you go?" And asking like $40,000. I'm like, "Yeah, who told you to do that?" My agent said to just offer everything we possibly could.
Yeah, and that's you know what I mean. It's right there is that fiduciary is you're violating it, right? And so there is at least some kind of mechanism for not getting the appropriate advice. Where especially during 21 when prices were insane, if somebody wanted to do that, I would say you go ahead and do that. But I'm advising you that is not a good idea. Yeah. I want that on record to tell you that this is not a good idea to do this. Is that just because you're battling out all these people and the market, the value of your house, I just said it, is what a seller's willing to sell it for and what a buyer's willing to pay. Yes, but as a fiduciary to my client who I have a signed buyer broker agreement with, if I gave them that advice, my advice is, I don't think you should do that. You can go ahead and do that, but I don't think you should do that. And then they get to make that decision on their own. So, back to, it still doesn't make any sense, because that's where that sales piece comes into play, because I get valued. The value of me, my commission is based off that final sticker price, and the incentive
there's a major conflict of interest.
Major conflict of interest. And I know they're doing what they can to,
there always will be some kind of conflict of interest in every situation, no matter what. You cannot be free from conflict of interest.
I don't know. That's a bold statement.
In any kind of professional setting. In any kind of professional setting, right? Like, in any kind of professional setting, you can't be.
True. Well, maybe not true. I won't argue with that at the moment, because I can't think of an argument against that. Because I haven't thought about the different conflict.
But very finite.
But in real estate,
very finite, but not absolute.
In real estate, there's a lot of options for conflict of interest. There's a lot of opportunities for agents to take advantage of that.
So here's a hypothetical then. Back in 2021, I'm a buyer.
I don't deal in hypotheticals, Jeff. Okay, go ahead.
I'm a buyer. And this is loosely based on a scenario that I was involved in. I'm a buyer. I pay $100,000 over asking price for just a normal 2-story townhome. $100,000 over asking price, because I can qualify for it because rates are so low. Well, here we are 4 years later. Those townhomes are now selling for $100,000 less than what I paid. Can I go back and sue my real estate agent? Can you go backwards?
I think you can.
Probably.
right?
Well, okay. I
have
mean,
an
I think
email from-
this is America. You can always sue somebody for anything.
Right. So I have an email from my real estate agent saying, hey, yeah, like, here's the other agent is telling me that we've got offers, $50, $75, and $100,000 over asking. The only way to get this is to pay $500,000, for a $400,000 townhome. And now
That's violating fiduciary duty. Absolutely.
I would think so. So
absolutely.
Yeah. I was in a similar situation, and
Hopefully you weren't the buyer agent.
No, I told the buyers, I said, look, I'm not going to represent you on this deal. And they offered, I'm 99% sure they didn't get the home, but they offered something like $75,000 over asking on a townhome. And I was like, I'm not.
But as a seller, I'd be like, yeah, let's jack that price up
all day long.
If I'm representing the seller, I'm saying,
all day
hey,
long.
Well, that's your job.
That's your job to get in the most money, right? And
Yep.
so
which again goes back to the messed up scenario. Like there's no other industry like it.
But if you're paying your buyer's agent solely on, and it's the system we're in, solely on the purchase price that you buy the home at, and whether or not the transaction closes, there's a huge conflict of interest.
Well,
that the agent
I
has
got the
to
question
try
the
to
other day.
manage.
Have you seen commissions change? I'm like, no.
Yeah.
I mean, I've seen commissions change for other agents, but have I seen the value of my commissions go down? No, they're about the same. 2.5% is basically what the average is commission per agent, whether it's the buy side or the seller side. But I've seen a lot of buyer agents putting in offers at 1% that they've put on the offer that they're going to only take 1% commission from the seller, which is great for the seller because it nets them more money. And we use it as a listing agent as a tool to net them more money, right? We're going to offer a buyer agent commission depending on what the value of the offer comes in at, right? Because the seller has a net number that they're trying to achieve. They want to get the most money for it. And especially in multiple offer situations, it's going to be a function of the negotiation. The commission is going to be a function, which is helpful, right? And that shifts things a little bit, but it's not going to really make a wide sweeping change, which is why I don't understand why the NAR made some kind of settlement, because I don't think the DOJ, ultimately where we've landed so far, the story has not been written yet. This isn't where we're landing. I think the DOJ is still going to continue to put pressure on
it's only one,
buyers paying for their buyer agent, sellers paying for the seller's agent.
It's one piece to the
which is
puzzle.
good for
which is good for everybody.
It is good for everyone in the end.
Well,
no. It's good for everyone except the part-time buyers agents.
Yeah,
They
exactly.
will create a bigger barrier to entry.
Yeah,
naturally
because
for
the buyer
industry.
agent commission is the buyer's money anyway.
Exactly. True.
Mm-hmm.
I thought that was interesting, Mal. If you want to go to my screen here, days on market per price point. So this is ranked days on market. So homes valued from 900 to $1 million, 87 days on market. Those are the homes that are sitting on the market the longest, between
Did you
9
break
and
down
$1 million.
list to sell ratios based on price point by chance?
Nah,
So
that would have taken me an hour.
yeah.
But the point being is that just in these price points, it's taking 87 days for, and if you think of, okay, my buyer's or seller's market, if it's taking longer to sell, that's more of a buyer's market, right? Because homes are sitting, less demand is for homes in that price point. From number 2, the longest days on market, 600 to 700,000, 81 days on market. So the average is 78 days, 81 days for 6 to 700,000. Number 3, 800 to 900,000, 80 days. So basically between 600,000 and $1 million, that's what's taking the biggest hit. And those are the move up buyers. I think the homes that are active on the inventory, those are, we already have a house and we're wanting to get into a bigger house or
they've got a bunch of equity from their home. They can pick and choose what they want.
They could just stay put.
Or they can, they don't have to buy, but they can if they want to.
Right.
So they can be picky on location.
Number 4, million to $1,025,000, or 1.25, 1,250,000, 72 days on market. And then I'm going to, so that was interesting that it's homes over $1 million are going faster than homes under $1 million, between 600, 900,000. 1,250,000 to 2 million, 68 days on market, which I'm going to get into is the migration data is like who's buying the house that's over $1.25 million. They're coming from out of the area. They're not from here.
It's people with the cheddar.
It's people with the money. And then what's taking the longest or the shortest to sell is between 400,000 and 500,000. So it's only 51 days on market for between 400,000 and 500,000.
Because those are the only homes that are affordable.
Those are the affordable ones.
Quotation marks affordable, right?
Yeah. 63 days on market for homes 2 to 250.
And those are mostly trailers. 2 to 250, right? I mean, or like small townhomes.
Townhomes, yep. Individuals. So there's not a big demand, but 63 days on market for those. But yeah, basically between 300 and 500, or between 300 and 600,000, those are the homes that are selling the fastest, which I thought was interesting.
Yeah.
Interesting data. We got mortgage rates, just looking over time over the last year, they've gone up, they've gone down, and then they've gone up again, which is, we're going to see more of the same. We have not broke under 6% in, it's basically been 5 years.
I was just going to ask, what's the lowest interest rate in the last rolling 12 months we've seen? Has it been? It hasn't not been under 6, right?
No, it's like 6.1% back in September.
Let's see what Perplexity says.
I'm looking at the chart right here, so I can.
Oh, you got charts.
I got a chart.
I got AI.
You got a. What do you think about that, Brandon? 6.1. That's not a bad. That's not a bad interest rate, but that's
the 10-year the 10-year Treasury's really been trading down, but the mortgage, the MBS spread has been widening.
which means what?
I tend to think what that basically means is that it's the mortgage market saying like, yeah, we don't really believe the 10 years is going to stay down that far, so we're not going to start quoting stuff, because you have to remember, like when you get a mortgage, they have to queue that up. They're going to lock the rate, and then they have to close, and then they're going to have to warehouse that loan for about 30 days as they package it and then get it sold into an MBS. Mm-hmm. And so if the 10-year just trades down on like a snap reflex, they can't just go start like shifting the mortgage rates down, because if the 10-year trades back up, then what it does is they end up taking a huge loss on just originating your loan, because originating the loan is actually quite risky, right? A brand new loan has a bit of risk. And if the interest rate moves like, say, like 1% while they're warehousing a new mortgage, they can lose like 10, 15% on your mortgage, like just for originating. That's a big loss,
mm-hmm.
you know? So you just have to be, I think like, if the 10 years coming down, but the mortgage rates are just widening every time it drops down, that to me tends to indicate that rates are going to stay secularly higher, right?
Yeah.
So coming into a cyclical low maybe, or a short-term low, but I think rates are going to stay kind of...
We're locked. We're frozen.
Range bound.
The lowest, according to Perplexity, March 27th, 2025 was the lowest interest rate in the last 12 months at 6.64%.
That's wrong. Perplexity's wrong.
That's what you don't pay for Pro, do you?
No, for sure.
But it's also like where's it getting that data from, right? And as the index goes, like my interest rate is going to be different from your interest rate no matter what, right? Just based off the factors that go into what your qualification is for your rate. So credit score can have a big impact on that, and who's getting that interest rate versus who's getting the low sixes like we were getting in September 24.
Yeah, I've seen like VA and FHA down into the high fives.
Yeah, and that's another thing. But a lot of those come with origination fees, right? So you can go, if you have a little bit of money down and pay ahead of time to get a lower rate, that ultimately over a 3 to 5 year period of time, you're basically paying the same.
I think like the buy down typically takes more than 5 years to get a payback on a buy down. That's what I tend to caution people around buy downs.
Well, the origination fee is different than the buy down.
Oh yeah. But I'm just saying, if you
an origination
say
fee
I don't have an origination
1%.
fee, right? But if you say like, but I don't have an origination fee on like a conventional the same way, I don't have that same origination expense, so I'll use that same dollar amount to buy down my rate and get a more favorable rate like the FHA or the VA loan had to offer, then like you can do that. And I think that's what you're trying to say, right?
Mm-hmm.
Like that's what all of a sudden they become sort of apples to apples that way. And my point is, I still in any scenario typically tend to caution people around buying down rates unless you're super certain you're staying in the home like a really long time.
Yeah, and go to your lender and talk about what that looks like, because they can give you a chart. They can amortize it out, and they can say, okay, this is where your break even point is going to be. But there's a double catch with the FHA loans is that you have an origination fee, and then you got to pay mortgage insurance on top of it. Mm-hmm. And so you might be getting a low rate, right? You see the sign, it's the marketing ploy. It goes back to this marketing
5.79 or something. But you're an effective rate of 6 still, or whatever.
Exactly. So going back to the Perplexity being wrong is that AI is not going to save us, folks. It's got a long way to go before they save us. Okay, you guys can't see this, but I'm looking at the map of the United States. So what did I say? Arizona, Colorado, California,
Idaho.
So if you look at the county by county breakdown, so on this map, basically the entire coast of California from top of the state all the way down, the average price is over the average sales price or value of the home is over $550,000. So if you think of what our median price is, so it's roughly between $550,000 and $1 million across the coast. And then if you look in the Bay Area, it's the average value of a home is $1 million. It's the average price of a home. And if we're in this mid 680s,
that ain't no McMansion either. Tell you
it's not a McMansion. And so, but if you spill out from the Bay Area, basically across the entire state, all the way to the Nevada border, and then you go over into the Reno area, the average price of a home is over $750,000, where ours is $680,000. So if you're looking at where is all this money come from? If you look at Colorado, basically all of the Denver greater metro area of Colorado, all the way up to Fort Collins, and then all the way down to the southern part of the state, the Denver area specifically is $1 million is the average price value of a home, right? And so if your average price is $680,000 here, the average is in Colorado is $1 million. They got to come down a long way for us to see downward pressure from out of the area. Salt Lake Valley is the same thing. Summit County average price point is over $1 million, but the Salt Lake area, just in and around the Salt Lake area, everything's over $750,000. Between $500,000 and $750,000, which we actually have a net loss of people going up north. So we have more people leaving Southern Utah to go up north rather than them coming to Southern Utah.
Interesting.
Which is interesting.
Sounds like a bad trade. You have to buy a more expensive house and a snowblower.
Well, they also have more options, right? Their inventory is going to be different. They have more options to buy houses up there, and it comes to jobs, right? Is that people leave this area because we don't have as many jobs, where retirees, the Seattle area, right? Seattle area.
I have a buddy that bought a home.
$750,000 or $750,000 to $1 million in the Seattle area.
It's crazy.
It's the average price.
So I have a buddy that just sold a home in Denver. He bought it in 2017 and he netted $1.2 million.
There's a net.
Netted.
They get to take that money and go do whatever they want with it.
No kids. They have a truck and an Airstream.
First thing you get to do is pay capital gains tax, because that's far and beyond the primary home residence exemption.
I don't know why people are moving here from Indiana, because the average price home in Indiana is not the same.
Okay, have you ever been to Indiana?
No.
You would know why people are moving here from there if you had been.
You're saying...
this might sound crazy, but I hate real estate agents. And after being one myself for the last 10 years, I know the good ones from the bad ones. If you're thinking about buying, selling, or investing in real estate here in Southern Utah, we want you to interview us for the job. Go to realestate435.com and give us a call. We promise you're going to love us.
Yeah.
I'm saying I, too, am from the Midwest, and I am imagining that they left Indiana for some of the same reasons I left Wisconsin.
Fair enough.
Going back to the snowblower thing.
Yeah, I don't have to shovel sunshine, man.
Mm-hmm.
Yeah, they're pretty much all flyover land. There's very few people. Tennessee, there's some in Tennessee that can get more bang for their buck down here. Yeah. Virginia, I mean, all the mass layoffs for the federal government. If you're on the East Coast, this is definitely looking nice, because the values
St. George.
Come to St. George, Florida. There's some counties in Florida where people can move here. But if you're looking at the majority of the home value appreciation has been in the Mountain West. It's been the Mountain West and the Pacific Coast. And so we're in such a great location for that. We're going to continue to see people coming from Montana and Idaho and Oregon and Washington. Mm-hmm. Nevada, interestingly enough, we have a lot of people moving here from Nevada, where Vegas values have gone up.
Yep, a lot.
But that Reno area has gone up a lot, and it snows. And so they're trying to get out of the snow and move down to the sunny St. George.
Population of Vegas has gone crazy too.
I can't believe Colorado. Dude.
Vegas is really interesting. Have you seen the stuff about like the year-over-year revenue declines in Vegas?
Chris Connor sent me something about the hotels and the casinos are getting hammered.
Absolutely destroyed, man. I am uneducated on the topic. I'm not an expert by any means. I just find it fascinating, right? Like that you have parts of the economy and stuff that is doing great, right? Like Disneyland's packed, but the Strip's pretty empty.
Yeah.
You know what I mean? Like, and the hotels just aren't performing the way the casinos aren't bringing in.
I wonder if it's a generational thing.
That's what I'm so fascinated by.
And they can do it online. Like if you're going to be a gambler, do you want to go to Vegas to go gamble? It used to be you could only go to a couple places, but now it's like gambling. You can do anywhere.
I remember,
and people are drinking less too. You know what I mean?
Yeah,
like
I saw those numbers. Millennials are drinking way less.
Prices 5 years ago,
unless you're in Michigan,
you could go to Vegas and park for free.
Wisconsin and Michigan, they like their beer, dude. Keep going, Jeff.
Well, you could go to Vegas and you could park like almost anywhere for free. Now it's like, we went to the outlets a couple weeks ago, and it was $7 to park in like the parking lot
at the outlet mall.
Yeah,
are you serious?
The North Outlet Mall.
That was free for like ever.
I know. So
well, they got to get their money somewhere. If people are stopped gambling,
well, I think people are just not going as much because you're just saying the value proposition of Vegas isn't there the way that it has been historically. It's not. It used to be so like the appeal was, it was like even just 10 years ago, you go down and you got a hotel room for $45 for the night, like a decent hotel room, and they gave you a nearly free hotel room and free parking and all this stuff because they banked on you gambling away a lot of your money at the casino, and so they knew they were going to make their margin there. And now it's like you just get nickel and dime everywhere you go, and it's just dirty and it's like not appealing, and you know what I mean? It's just like, Disneyland's got its own problems with nickel and dime in you everywhere you go, and there's a slew of issues there. But it's just fascinating that Disneyland's holding up while Vegas is getting
just obliterated.
Yeah,
$37 for a stuffed animal at Disneyland.
Is that all? What do they put them on sale?
Oh man, Disneyland! I spent a lot of years at Disneyland, living down the street and getting season passes. Those days are long gone. All right, last thing we're going to cover: unemployment. We're seeing basically 3% unemployment in Utah, 3% unemployment in St. George area and Washington County, 3.2, 3.3. No changes from year over year. Average weekly wages, $931 in Washington County. Average weekly wages for all industries by county. St. George area, this is at a quarter 3, 2024. I'm so sick of getting data that is old. What is so difficult about getting labor data? This report was from March. This is March 15th, 2025. The Department of Labor Statistics put this out, but they don't have data since quarter 3 of 24. I don't understand why they can't get this right now.
I don't know. I think one of the things that has made labor data less
accurate?
Yeah, accurate or reliable. Less reliable than it's been in the past is the increase of like the gig economy. Because it used to be that you could get like data from ADP, and that was a really good measure because everyone's getting their paychecks and it's flowing through their system. And so ADP could publish this data on like how many people are employed, how much are they getting paid, how many hours are they working, right? Like, it was right. And so you could go to the payroll companies and process this. But if you're driving on Uber or you're a real estate agent, right, as an independent contractor, like anyone that's working independent contractor, that data is not reported the same way and it's hard to track. And then so the guy that's driving Uber, is he laid off and unemployed right now, or is he technically employed? Which one is it?
He's just pushed pause on his Uber account, and so now he's just not. He's hanging out at home.
Because, that's what I'm saying. Is that employed?
I didn't think about that.
It is, and so it's really messy. And I don't know if that's why it's delayed as much, and they're trying to like clean up the numbers and sift through it and manage the data before it goes output. But even if that's the case, that's why it's delayed. As like the quant in me says, that makes it unreliable data. Like if you're getting data that's been smoothed, then that's kind of an issue in and of itself too.
Mm-hmm. Yeah, it is very frustrating. It seems like there's
Isn't that how pharmaceutical companies work? Smooth the data.
Smooth the data.
Lobbying.
I think that's how the government works.
Lobbying is
the government works that way.
It's a separate conversation for another day.
Employment, St. George area employment.
We're getting RFK on soon, aren't we?
I like this.
Yeah, next week.
I like this information a lot. No, we're not getting RFK on here. As much as I tried to get him during the
maybe
election,
maybe one of us could do a voice impression.
If you guys could share this to friends, so we can pump our numbers up. Maybe get some of these bigger candidates on here. That'd be great.
Hit follow and subscribe so you don't miss the RFK.
Yeah, if you didn't know, I'm going to pull Jeremy Larkin. If you didn't know, we're real estate agents here in Southern Utah, Real Estate 435. Go to realestate435.com and find us on 100 South, downtown St. George, right across from New City Hall. We can help you with all real estate needs.
Shout out to Jeremy Larkin.
He's the promoter of all promoters. I'm not great at this. He's great at it. Non-farm employment, about 88% of our employers are not farmers, which I think is still such a funny thing that we keep sticking into. Employment, 18% of our employment is trade, transportation, utilities, 15% education, health services, leisure, hospitality is 12% of our economy, government's 11% of our economy. Oh my gosh, Doge can't come fast enough. Mining, logging, and construction, which is interesting, 11%. This is an important number because we have gone up in construction. This is mainly mining and logging, let's be honest, in Washington County.
So there's as many people
issuing
permits and telling you how to build as there are people building.
Yeah, exactly. Exactly.
It seems a bit skew.
Government falls into schools though too. This another thing is
teachers.
I guess education and health services are separated out of this, which is weird because the government funds a lot of that stuff. But government jobs, there's a whole range of it, but 11% of our economy is based off just government and employment, which I think is a pretty big number, being that it's basically a big leg considering the rest of them.
30,000 people in the county.
Yeah.
Based off the population.
That's so crazy.
Leisure, hospitality is 12%, education 15%, trade 18%, and then construction is 11%. One thing I'll say is manufacturing has gone down. Everything's gone up except for manufacturing. Manufacturing's gone down 2% from 24 to 25. Information has gone up 10%, but we used to have basically none. Now we have 1% information services. That goes into the technology sector.
Is that Silicon Slopes finally, or
kind of
Slopes building out?
Tech Ridge,
yeah.
Tech Ridge, a little bit. I think because they're employing more and more. But we got a lot of different companies coming in doing all different kinds of stuff. Financial activities, 3% is a pretty small number. Other services, 2%. That's a gig economy, I guess. I mean, maybe where would the gig economy come into? Would it be
goes back
trade, transportation, and utilities?
I have no idea.
Yeah, where does that fall into?
What kind of gig are you talking? Because property management is going to be that's a different kind of gig economy.
What I really like about this mix though is that there's not one clear heavy industry that we're reliant on for employment, which I think
it's spreading out more than it
going into a potential recession, going into an economy that's shaky at best, right? We're just not quite sure how we're going to go. No matter what, when we look at these numbers, I don't think there's one single sector that is really going to tip over for us to see home values come down. I think is what I'm bringing the point back to is real estate. We have counties all over the country, especially the Mountain West, that are bringing dollars into Washington County with real estate values being higher than us there. That's going to continue to have stability in the real estate market. So feel some confidence in that our local economy is strong and diverse, much more diverse than it has been in its entire history. Going back to 2008, 30% of the economy in 2008 was, or 2006 and 7, right before the crash, 30% of the economy was construction. So looking at that's down to 11%. Yeah, we just keep building. Seems like that's all we're doing. But at the crux of it is that's not our local economy. It's just construction, which is good to see. But I think that's all the stuff you need to know about the real estate. Anything we want to leave everybody with, guys?
I think that's it, man.
We got World Strength Games tickets to give away.
100.
So
we got 100 tickets we got to give away.
It's awesome though. It's gonna be. I got psyched up. So if you didn't listen to last week's episode, we interviewed the founders of World Strength Games, Russ and Abby Anderson, and it was a very interesting conversation. We talked about stem cells, which I had no idea is another unique, awesome business that's here in St. George that they own and operate.
I mean, not stem cells?
Not stem cells. I don't know what I have any obligation.
Stem cells.
They're stem cells. I don't have any obligation to say what they are or they're not, but they talked freely about it. So, but interesting the biotechnology industry here in Washington County. We got a lot of interesting stuff happening there, but check out that episode. If you want some tickets to World Strength Games, reach out to us. Make sure you subscribe, hit us some reviews. It's really helpful for our motivation and our energy to put on the best guests possible when we get positive feedback. So jump in the comments. Visit us, realestate435.com. Reach out to us. Let us know how we can help you. And you guys, we'll see you out there.
Bye.
Thanks for listening in. If you enjoyed this episode, please like and subscribe. Make sure you're following us on all the social media websites. We love your support. We love the dialogue. We want to continue that going.
Find us at realestate435.com. We'd love to help you find a house here in town or help you get wherever you're going.